Your truck expense is one of the biggest expenses you have every year, and yet it's one of the very important deductions that most landscape and lawn service owners fail to maximize. And that's what it's about, using the tax code, using the legitimate legal strategies you can use to maximize your deductions, your write-offs, and reduce your taxable income. So let me help you understand there's two ways that you can write off truck expense. First is the standard mileage rate. Now, this is what most landscapers use. It's kind of the default mode. Why? Well, most landscapers don't really keep a good record of their mileage. Even though the IRS dictates that you must have a concurrent mileage log, most landscapers are so busy running around getting work done, they don't really track mileage. At the end of the year, their CPA calls them, hey, how many miles did you drive last year? 10,000 miles. I can tell you with certainty, you're absolutely not maximizing the deduction because you probably drove more and you probably are underestimating it with your finger in the wind simply because you know your record keeping has holes in it and you don't want to overstate or poke the bear, right? You don't want to overstate the mileage and get into IRS trouble. If you've got legit records, you can claim every mile. And so let's just say one, again, is the standard mileage rate. It's 70 cents a mile. There's another way you can deduct auto and truck expense, and that's actual expenses. Now, that sounds rather daunting because it's like, okay, what did I spend on gas and oil and insurance and vehicle registration costs? What was the value of depreciation on the truck? Maintenance and so forth. So that requires extensive record keeping. But here's where most people kind of fail to catch what's going on here. The IRS gives you 70 cents a mile. Do you know what the AAA, the American Automobile Association, actually calculates the cost per mile to drive an F-150 or a Silverado? It's 98 cents a mile. They're taking into account everything. And yet the IRS is willing to pay 70 cents. So this is why I'm saying many landscapers, small business owners are just not maximizing the deduction. Keeping an accurate mileage log is easy. Just use an app on your phone, Mile IQ, and it kicks on every time your truck starts moving. It's GPS activated, and it will spit out a spreadsheet at the end of the year documenting all of your miles. So how do you determine what's best for you? The standard mileage rate, or deducting actual expenses? Well, assuming you have good records, it really, in my mind, it comes down to a rule of thumb. I figure if you have a truck that you paid $50,000 or more for, then it's going to be better for you to take actual expenses rather than just accepting the IRS mileage rate of 70 cents a mile. If you have a $50,000 truck and the IRS allows you to depreciate or write off that truck over 5 years, well, isn't that about $12,500 a year in depreciation expense? Now, I'm assuming you're using the truck 100% for business use because business use percentage does enter into the picture. But again, you pay 50 grand for a truck, you're going to be able to write off 12,500 a year in taxes, plus your gas, plus your oil, plus, of course, tolls, insurance, registration, tires, maintenance, all of the stuff. Just $12,500 alone on the depreciation is more than typically you could take if you claim 10,000 miles. You know, you stick your finger in the wind, tell your CPA you drove 10,000 miles, that's worth about a $7,000 deduction. Well, actual expenses are going to give you a lot more. What I recommend you do is sit down with a tax professional at mid-year and then again at the end of the year. And let's start mapping out, what is your income? What are your expenses? What are you doing in terms of mileage? Should you be taking actual expense or should you be taking the standard mileage deduction? And at end of year, is it best for you to buy a truck so that you can get the write-off? Because right now, not only can you claim $12,500, but you may be able to write off 100% of the cost this year. The new One Big Beautiful Bill allows you to write off 100% bonus depreciation. So does that make sense in your situation? Well, you really have to, again, sit down with an expert and figure out, is it smarter for me to take that big deduction this year? Or should I spread it out over the next few years? Will my revenue and my business keep growing? Do I want to keep, some of that write-off, so to speak, in the bank that I can write off over future years against bigger income? Or did you have just a banging year this year, the best year you ever had, and you need a big-time write-off? Then it may be smart to go ahead and buy a vehicle, place it into service before December 31st of this year, and take a huge deduction on your taxes. So I'm Jim Flauaus. I have been helping self-employed contractors prepare tax returns, plan taxes, do strategy, do bookkeeping, QuickBooks, all of that for about 20 years. I've prepared thousands of returns over that time. I know the code. I know what the IRS tax rules will allow. I know what the tax courts will approve. So what we want to do is claim every legal deduction, tax credit, legal loophole, tax strategy, everything available, so you render to Caesar what is Caesar's, but not a penny more. If I can help, there's a link below. Copy and paste it into your browser, or click that link and we can book a quick phone call where you can see if our services would be helpful to you. That's it for this time. Please subscribe to my channel and like this video, and we'll see you next time.